This is Mark Espy once again with MarketTamer.com, also with OptionsRevolution.com. And again, this is Friday afternoon, the 27th of August, after market close. And must remind everyone, this is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. We're looking at the SPX, the Standard & Poor's 500 Large Cap Index. And again, very interesting weekend that we found, just a tremendously bearish week going on this week until about Wednesday, and then we put in a spinning top type of a session, and it was an indication that maybe things were slowing down to the downside a little bit. Then we whipsawed again and came back down, not with a terribly large trading day, fairly narrow range trading day, and kind of reversed what occurred on Wednesday. And then today, a huge pop today. So we got about 17 plus points in the SPX. You'll notice, though, that we have a couple of shadows or wicks here. The one that was put in on Wednesday and the one that was also put in today was right in line with this double bottom that was put in here in May and early June. And that's at 1040, 1044 in that neighborhood. So it's kind of strange the way that happens, you know. Technical analysis works that way. So it did, in fact, bounce off of that area, but there are other reasons too. You'll notice this internal trend line that I've drawn here all the way from the April highs down to present, and we had some significant touches. We have a peak here and a peak here, which actually is part of this inverted head and shoulders, left shoulder, head, and right shoulder, and it lines up perfectly. So we have perfect market symmetry on that. We actually broke through this and came up above the 200 for a very slight period of time, as you well know, and then we came back down, very bearish since this little shelf that we put in here in the early part of the month. So the question that one must ask is this bounce for real? How far are we going to go? And again, very similar to my analysis on the Dow, I do believe we're going to continue up, but it's going to be for a short period of time, not tremendously sustained rally. I believe we're going to come up and test the 50 and possibly this swing high from 1100. I really don't believe it's going to go any higher than that. And then we're going to come back down and retest this area and possibly even lower. But you can see here where this inflection point is, this confluence with this trend line and this trend line right here. This should afford some pretty decent support at 1040. For the time being. So if it drops below here, the first area we would look at is the swing low at 1010, 1011, which was put in here in July. If we do go higher than this, which I don't believe we are, the next area that we would test would be the 200 simple moving average, this red line, this shelf that was put in at 1130, which lines up. This is actually a double top with the swing high that occurred in June. Then we have this swing high at 1170 in May, and then obviously the April high at 1220. We're in the oversold area right now with the stochastics, but it looks like it wants to turn back up and make the journey north from the oversold area. And we also then have the MACD with the crossover in the bearish area. It looks like bearish momentum is slowing down a bit. It looks like it might want to initiate a crossover MACD over the signal line. You have to just simply watch that and see. So in summary, I think a short-term bounce, retest at about 1100, and then come back down and retest here. We might end up moving into a channel for a while. So we just need to watch that closely. All right, we're going to go over and take a look at the comp queue.